You're watching BanKable Insights. Today, we have a real bookworm. She's an African who works in London, and she talks economics. Ladies and gentlemen, in the house, Razia Khan. But where's the applause? Razia, good to have you. Thank you for chatting to us.
Very good to be here.
I want to start by asking you a difficult question. Post-COVID-19, what is the kind of African economic landscape that you are seeing? Is it a place where there's huge opportunity, or are we likely to look at devastation right across the board after what might turn out to be one of the biggest resets of the global economy since the end of the Second World War?
So this is one of the questions that's really occupying many of the economists to look at the region. On the one hand, we know about the near-term damage that COVID is causing. We know that even though many sub-Saharan African countries seem to have had a relatively mild health crisis, thankfully, compared to many other regions of the world, the big concern is that African economies had been slowing even heading into this COVID crisis. And given the strains on fiscal revenue, given the fact that there hasn't been much room for significant fiscal stimulus packages, the key question is, what is going to be driving growth going forward? Now, there are two ways of looking at this. One is, you've still got the fundamentals in sub-Saharan Africa that should, over a certain time period, be driving increased development, increased growth momentum. You've got younger populations. You do have a pace of urbanization. Granted, it's been interrupted in the recent past, but that generally means people leaving lower value added activities and seeking employment in cities where they get engaged in higher value added economic activities. Those fundamental drivers of growth aside, though, the near-term question is what leads to a demand revival? It's going to be very difficult for African countries to go it on their own, to do this on their own. But we also know that we can never interpret or analyze the outlook for African economies in isolation to what is happening in the global economy. What we have seen recently is an unprecedented increase in the central bank balance sheets of developed markets. That liquidity is going to have to go somewhere. And the ability of African economies to attract some of that, to be able to sustain investment rates, even as governments have to pull back, that is going to be key to the growth outlook for the region.
Yeah. Now, we know, of course, Razia, that this pandemic has caused Africa's first recession, I think the World Bank said in 25 years. And we know also where the disruption has come from. So the destruction of demand, the disruption of supply chains, and also, of course, lower commodity prices, as well as the inability of people to move around. I wanted to ask you, in terms of the responses that you have seen on the African continent, just a quick analysis of how that response has been and perhaps where the missing parts could be.
Well, when we look at sub-Saharan Africa's experience with the COVID crisis, of course, there's still a lot of divided opinion as to why we've seen what looks to have been a relatively mild health crisis. Now, some would say that outside of South Africa, there just wasn't that much comprehensive testing. And where there was in countries like Ghana, they tend to show a higher incidence of COVID than has been experienced elsewhere. There may be something to that. But Africa's ability to have contained fatality rates as well as it did, and the hope is that this can remain in place, is attributed to a number of things. First of all, the arrival of COVID in sub-Saharan Africa a lot later than had been the case in other economies. So by the time many European economies were already announcing severe lockdowns, that's around the time that African economies started to experience their first cases, typically arrivals from elsewhere. There had been the time to put in place whatever learning was available, given that this is a relatively new thing that everyone has to contend with, but learning from the experiences of other countries and taking very early action. The point isn't lost on anyone that countries like South Africa were announcing lockdowns before there had been a single fatality. And that early action, no doubt, helped to save lives. The other experience of this, and there's a really interesting lens through which we can look at this, what it says about state capacity. In a lot of other regions, and we know in countries like the UK and the US that were particularly hard hit, there is still this ongoing issue of compliance with what is being recommended by the health authorities. In sub Saharan Africa, what we saw, generally speaking, was an example of more effective states, more effective governance. People were generally complying with what had been asked of them, despite the difficulties that this involved. At the outset of this crisis, everyone's concern was that, unlike developed economies, sub Saharan African economies generally didn't have the fiscal space to be putting in place large fiscal packages. Unlike developed economies, where you could announce furlough schemes and some level of income support, that wasn't necessarily the case in many sub-Saharan African economies. Then there is the economic informality to contend with. When people's livelihoods depend on their ability to go out on any one day and do whatever it is that they do to earn their money, it's very difficult with social distancing because that does mean a complete halt to that kind of activity. So difficult trade-offs. But I think the one positive that has come out of this is what it says about state capability in the region.
Say it loud, say it from across the world, say it from the hills, Razia. How many times do we say Africa has gotten this one right? And Cyril Ramaphosa certainly looking like a star now. Now, Razia, after that response, I wondered if you could be able to share with me how you would look at who has won, who hasn't won, and then perhaps break it down in terms of themes about who's going to emerge out of this looking the better. And I'm talking Africa here.
So this is where the response becomes very important, not just the health response, but the economic response. And we know that while there is never a good time for an economic crisis, this had come at a particularly worrying time for the region's economies. After the late 2014 oil price crash, a number of oil economies have barely grown. Nigeria has seen negative per capita income growth. Angola has not seen a single year of positive economic growth since that period when oil prices collapsed. So not only were we looking at a situation where there was weaker growth momentum than one would have expected anyway, there was a great deal of pressure on different authorities to be reducing the scale of their fiscal deficits, even going into this crisis. There hadn't been the fiscal space to come up with a meaningful stimulus response, but there were other issues. There is still this long-standing issue of the build-up of debt ratios. Not only do governments have to think, how do we get through this? We'd like to give some kind of revenue relief, but just what is that going to be costing us in the long term? How unsustainable do public debt ratios get? With this background in mind, it's clear that one way of sifting out the potential winners from the losers, a very basic one, is just how quickly can growth be reignited. And one of the good things about the kind of state action that we've seen in the countries that were particularly successful in combating COVID is hopefully they are able to emerge from this sooner. Now, we say this with a question mark. In Europe, we know that a lot of instances, there are second waves of COVID happening. It's the same thing around Asia. We can't necessarily assume that there is a complete return to normality. But first of all, there was the forceful action put in place that hopefully, over the medium to long term, means that economic activity can resume sooner than would otherwise have been the case. That's important because in economics, we never get to establish the counterfactual. The second point is who is embracing reform. Now, different governments will react to this crisis in different ways. There has been substantial monetary policy relief given, a lot of capital relief given to financial institutions, banks being told, here, we're easing up on liquidity, use the additional liquidity to restructure loans, lengthen the tenors, make it easier for customers to repay these loans. And generally, there has been a very positive experience of that across the region. Some countries are going even further, though. Countries like Nigeria, perhaps somewhat surprising in the sense as a reformer, but even before the COVID crisis, we had seen more of an effort on the part of Nigeria to do something about its very low revenue ratios. This, of course, is a key issue for the oil dependent economies. How fast do you move away from that oil dependency? Since then, Nigeria has taken steps towards eliminating the fuel subsidy. It's moved to more cost reflective power sector tariffs. So, on the face of it, there are some reforms being put in place. South Africa will be another economy that's going to be looked at very carefully. And in the last week alone, we've seen announcements on renewables and the new bid round. We've seen announcements on the spectrum auction. We've seen the announcement yesterday on land reform, and the hope is that something more meaningful can come about. But the extent to which South Africa can use this opportunity to embrace meaningful structural reform, I think most economists agree that this will be the main determinant of the medium-term growth profile of the country. So yes, the health crisis has happened. A lockdown was necessary. That lockdown likely saved many, many lives. But in terms of rebuilding, it's the strength of reform that is all important.
Yeah, and in South Africa, I think to that list, Razia, you can also add what appears to be the start of the prosecution of people who have been accused of corruption. A very important message to send to the world. And of course, we must talk about Zambia, and we must talk about the indebtedness of African countries and their ability to be able to prosecute policies that will enable them to grow. But before we do that, I wanted to say, so we can't really class African countries in terms of the commodity producers and the non-commodity producers, nor can we talk about the regions in terms of who is growing faster than who. East Africa, of course, had been the champion before COVID.
So a very important distinction to make here, or a point to take on board, is that it's not just going to be about who produces oil, for example. We know that oil has been a magnet for a lot of the bearishness around the COVID crisis. People stopped traveling, oil demand plummeted, the sharpest demand plummeting that we've seen in the history of oil markets. But different countries will be impacted very differently from that oil price volatility. On the one hand, for Africa's newer oil producers, there are question marks around their abilities to substantially increase oil or gas production in the near term. Does the price environment make that investment feasible? And in many instances, the answers that we're hearing, especially since so much financing has been pulled from the companies involved, is that in the near term, probably not. But there is the bigger picture to keep in mind here. And that is that conventional crude markets have not seen the investment in new supply that would have been needed to cope with any normalization of demand for a number of years now. This predates the COVID crisis. Of course, COVID accelerated it. And that means there just hasn't been enough investment in boosting supply. Eventually, when demand comes back, that's going to create some upside for oil prices. Now, it isn't the key feature of the markets right now. It's not what everyone is focusing on, but this is the reality that the global economy will have to face. Africa's established producers are going to be in a much better position to be able to benefit when that squeeze higher in prices eventually comes. Africa's more nascent producers, especially those more marginal producers reliant on far higher costs of extraction, well, there's a question mark around whether they become hydrocarbon producers of note at all. Yeah. So, yes, to go back to your question, Godfrey, it's not simply about which countries produce commodities and which don't. It's not that simple at all. But the key feature is really around the embrace of reform. Which governments are using this as the opportunity to reset differently? Which governments are saying, yes, we know we've run into trouble with the growth of the public debt ratios. And this is why we need to have a framework in place that is going to be conducive to growth, that will establish the foundations for sustained growth. Because ultimately, the best way to achieve debt sustainability is just to have the denominator in that equation, GDP, growing that much faster.
100%. I like the theme around reform and the fact that it's being driven by two of the largest economies on the continent. Surely must be positive for the continent as a whole. And also I wanted to add that on Nigeria, of course, recently we saw the president ascending to that petroleum industry bill. And so hopefully in our lifetime, it will happen that there will be that reform in Nigeria. Let's talk debt. Let's talk about Zambia. Let's talk about this idea that seems to be developing in some commentators that we are likely to see debt default on a large scale across the African continent. First, your analysis of how the picture looks across the continent, and then we can then focus in a little bit on Zambia.
Okay, so we know since African countries started issuing in international capital markets that there is now a traded market for the Eurobond debt, and those Eurobond markets are clearly sending us a message. Compared to the volatility that we had seen in March, April, where there were real fears around debt sustainability, we have seen a narrowing of spreads. And this means that although conditions are still more difficult for many countries, and unlike, say, the MENA region, we haven't seen any new sub-Saharan African sovereign issuance since the onset of the COVID crisis. We still think it would be wrong to say that international capital markets are closed off to African issuers entirely. This is not the case, and there has been, generally speaking, a spread narrowing in much of the Eurobond market. There are exceptions, of course, and the focus near term is very much going to be on Zambia, given that request for a debt service standstill that is being extended to Eurobond investors as well. Now, many observers of the region, many analysts will have known that Zambia had significant debt sustainability issues even prior to this crisis. A lot was resting on Zambia's ability to be able to agree a funded program with the IMF, simply because if you looked at the external debt that was maturing and you compared that with what Zambia had in its foreign exchange reserves, there was no way that Zambia would have been able to repay that external debt, COVID or no COVID, in the absence of new market access. Now, in order to secure IMF financing, Zambia needs to achieve a certain amount of debt sustainability even prior to those negotiations properly taking place. Hence this request to creditors that had gone out, but it would be wrong to see this as entirely due to the COVID situation. COVID has likely exacerbated the pressures. There's still a debate to be had around how much the onset of COVID, the pandemic itself, has done significant damage to the debt repayment capacity of different African sovereigns. Let's not forget that there are a number of key frontier markets that would be eligible for the G20 DSSI, the likes of Kenya, Ghana, Nigeria, that have decided not to opt for it for one reason or another.
Absolutely. It's a pleasing picture. Still on Zambia, Razia, would you see eventually the word default creeping into the conversation on the country, or you think Zambia will be able to craft a strategy that gets the country out of this mess?
Well, a lot depends, of course, on how the debt service suspension is treated. So long as it doesn't impact creditors, it's done in an NPV neutral way, there might be a case for arguing, no, that isn't a default in the conventional sense. But much will depend on the negotiations happening between now and late October as to how this is viewed. The difficulty is once a country has obtained commercial financing, and if there are any changes that might be seen as a breach of that original contractual obligation to repay the debt, chances are there's a very high likelihood that that will be seen as a selective default of sorts. It's a very difficult situation to be in. Nonetheless, looking at Zambia's fundamentals, better to seek an agreement with creditors now, better for creditors too, perhaps, to be able to come out of that negotiation process, perhaps holding on to something that has a higher value than to allow for this to escalate into a potential default scenario when no one comes out of it more advantageously at all. So
Yeah.
this is something that Zambia had to do. The debt fundamentals were pointing in that direction for a long, long time.
Yeah, yeah, it's a story I've been watching as well for quite a while, and I remember attending one budget session where this was spoken about, and always the question that came back was that there appeared to be no political will to tackle the debt problem. But let's leave Zambia a little bit and talk about perhaps a little more brighter story. Kenya. Kenya was a star before COVID-19 came in. But as I was coming in here, Razia, I also saw a story saying that tea production in Kenya is now at a record. Talk to me about the prospects for that part of the world.
So Kenya is one of the few countries under our coverage where back in March, having revised lower a lot of growth forecasts because of the anticipated impact of COVID, and generally since then, it's been a case of taking those forecasts even lower as the economic impact has been more severe than initially thought. But Kenya stands out because of the strength of agriculture and ICT. Kenya might be able to buck the general trend. This doesn't mean no slowdown in growth. Let's not forget that Kenya has been severely impacted. To experience a shock where initially in the crisis, remittances were hit, they since seem to have recovered reasonably well. Initially, horticulture exports were hit, tourism earnings, all happening at the same time. It's relatively unprecedented for the country. The good news, though, is that the other drivers of growth, and it's not just Kenya, look at South Africa's own second quarter figures. There was a sector that drove positive growth overall, and that was agriculture. But that has been more pronounced in Kenya's case, where the tea numbers, the horticulture numbers are looking that much more encouraging. It probably isn't going to be enough to compensate for all of the downsides that we see, the curfew that had been imposed, what that means for economic activity, the shutdown of international travel earlier this year, which Kenya is only gradually recovering from now. It's not going to offset all of those negatives, but Kenya does bear watching simply because the growth impact may not necessarily be severe as we're seeing elsewhere where there's been a far more pronounced contraction. That said, it's not just about 2020, and growth is never just about a single year. The question for Kenya is very much what drives growth in the medium term. And if we look at Kenya's more favorable GDP performance in the past, it was very much associated with a great deal more infrastructure spending, big infrastructure projects that drove headline growth, even at a time when bank lending, because of the interest rate cap then in place, was relatively weak. The problem is, from a fiscal perspective, Kenya just doesn't have the space to be able to be driving those big infrastructure projects on the same scale in the future. So there is a question mark. As much as Kenya seems to be perhaps better protected from some of the downside risks associated with the COVID crisis this year, there is a question mark around what will lend itself to growth momentum in the future. We shouldn't ever forget the political cycles that are also important in different countries. And as Kenya moves closer to the 2022 election, let's look at what had happened to fiscal policy with the onset of the COVID crisis. There were tax reductions, VAT was cut, income taxes were reduced. This was to create a great deal more relief for consumers. But the problem is that as you get closer to that election period, is it really going to be feasible to reverse some of those emergency measures? And where will this leave Kenya in terms of overall revenue collection, given that it has been trying to reduce the scale of the fiscal deficit? So I think it's a cautious sense of optimism. Yes, Kenya has had a better crisis than most, despite the very real risks and the very substantial hit to sectors like tourism in the recent past. But there's still an open question as to how quickly growth momentum is fully restored, how quickly it comes back to the region, and what can be done to create the fiscal space for the infrastructure development that is still needed.
Yeah. Two other brighter spots, Razia, as we come close to the end of the program. Mozambique and Ghana. Very contrasting stories if you consider what Mozambique is going through with insecurity issues in the northern part of the country. Then, of course, the gas potential that it is sitting on. And then you also look at Ghana, a country whose economy was flying before COVID-19 and which appears to be also still, even as we talk today, one of the countries that might likely still emerge with a little bit of growth.
So very good references to both countries, Godfrey. And Mozambique, first of all, we've not seen anything like a scale of this resource find anywhere in sub-Saharan Africa, but we've also got decades of experience as the country's resource producers. And it tends to have been more the exception than the rule that we saw actual development coming through from resource-driven growth. And this is the very real threat that Mozambique, having to contend with all of its other development issues, having to contend with a very serious security threat, is going to have to deal with. The one thing we should never take for granted is the fact that growth can happen on autopilot in the absence of the institutions that foster that growth, that safeguard that growth. And this is something that will need to be watched very carefully in Mozambique as it becomes a resource producer of much greater importance. Ghana does stand out as one of the medium-term, more attractive prospects in the region. Its relatively diversified base, the fact that it does distinguish itself amongst peers by having a medium-term plan around the embrace of digital in the economy, some of the import substitution that is planned, some of the energy self-sufficiency that could come through over the medium term. All of these may well be an important building block for growth. But the constraint for Ghana is that its starting point with the accumulated debt levels do pose a risk to the outlook. For the Ghana government, as much as there has been a counter-cyclical policy response, in response to the COVID crisis, we've seen the abandonment of some of those institutional safeguards on just how narrow a deficit Ghana should have. And the plan is very much to return to that over the medium term. The question is, how easy is it going to be? So we saw the hit to the second quarter growth, a contraction of 3.2% in Ghana. And there is full expectation that this is an economy that is normalizing faster than others. But the big question that still looms over the medium-term outlook is how well can Ghana manage its accumulated public debt so it's less of a threat to future growth.
Absolutely. Razia, I would have loved to talk about Zimbabwe, at least just to put it on the record that we know the scale of the challenges the country is facing. And of course, Ethiopia, the big sleeping giant, which is beginning to gallop away. But our time has run out, so you have to promise that you're going to come back. Razia Khan, Chief Economist at Standard Chartered for the Africa region. Thank you for joining us. That's our program for today. Thank you for watching. Until next time, goodbye.